Let's take a quick trip back in time to April 16th, 1853, the day when India's first passenger train ran from Bombay to Thane. It was just 34 kilometers long, but it marked the start of something incredible, a railway network that's now one of the largest in the world. Today, the Indian Railways isn't just a way to travel, it's the backbone of a country's transport system and a big part of our economy. Now, if you look at the stock market, there are several companies that are closely tied to the railway sector. Each one plays a unique role in making Indian Railways what it is today. Let's break it down. IRCON International. Think of IRCON as the builder of big projects. It works on railway tracks, highways and bridges, not just in India, but in other countries too. Every time there's a major infrastructure upgrade, IRCON is likely involved. Then RVNL focuses on building new railway lines, electrifying tracks and modernizing older ones. It works under the Ministry of Railways and handles some of the most critical projects to keep our railway system running smoothly. Then there is IRFC, which is the financial arm of the Indian Railways. It provides the money needed to buy trains, coaches and even build new infrastructure. Without IRFC, many of these projects wouldn't take off. Then we have Titagarh. This company makes things like freight wagons, passenger coaches and metro trains. It doesn't stop there. It exports these products to other countries too, making it a key player in the global market. Then we have Jupiter Wagons, which focuses on the freight segment, building wagons and parts like couplers and bogies. It's a critical link in keeping goods moving across the country. Then there is IRCTC, the name we all know. IRCTC handles online ticketing, train food and even tourism packages. Since it's the only company allowed to manage these services for Indian Railways, it's a monopoly and a very profitable one at that. Then we have RailTel, which focuses on providing telecommunication services across India's railway network. It plays a vital role in digitizing railways and offering broadband and telecom solutions. Together, they make Indian Railways a massive operation that keeps growing. For investors, these railway stocks offer plenty of opportunities. As Indian Railways expands and modernizes, these companies are likely to benefit even more. Now, after being beaten down, the railway stocks saw a sudden surge. So what is leading to the rally? The Union Cabinet recently approved some big infrastructure projects worth 7,927 crore, and this news has sparked a strong rally in railway stocks. Companies like Jupiter Wagons, Titagarh Rail Systems, RVNL, IRFC, RailTel, IRCON International and IRCTC saw a notable jump in the share prices. The major reason behind this excitement is the approval of three key railway projects: Jalgaon-Manmad 4th line, Bhusawal-Khandwa 3rd and 4th lines, Prayagraj-Manikpur 3rd line. These projects will improve rail connectivity and make operations more efficient on important routes. This is great news for companies working on railway infrastructure because they'll get new orders and more business opportunities. Additionally, the government's continued push for indigenization and self-reliance in infrastructure projects could create further opportunities. Investors are now paying attention because the government is clearly focusing on upgrading rail infrastructure. Now, why is this important? Railway stock prices haven't been doing too well over the past few months. If you look at the Q2 earnings, the railway stocks have also underperformed a bit. IRCON's revenue fell 18% for the quarter. The company's Q2 net profit came in at 206 crore, down 18% year-on-year. IRFC, on the other hand, reported a modest 4% year-on-year increase in profit after tax, while revenue from operations rose by 2%. Rail Vikas Nigam Limited's net profit dropped 18% in the second quarter of the current financial year, missing analyst estimates. Revenue from operations declined 1%. So what now? The railway sector has strong fundamentals which indicate it has a potential to grow and improve steadily over the time. Government initiatives such as modernization efforts and large infrastructure projects are significant drivers that keep investor optimism high. However, while the long-term prospects look promising, it's essential to balance enthusiasm with the hard look at actual financial performance. Stocks often rally on positive sentiment or announcements, but if this isn't supported by strong earnings and operational improvements, those rallies might not hold up in the long term. So what do you need to keep an eye on? Alright, if you're considering investing in railway stocks, here's what you should focus on. Order book size and growth. Think of the order book as a pipeline of work a company has lined up. The bigger and more diverse it is, the better the company's prospects. Keep an eye on whether it's growing consistently. Then there is revenue and profit trends. This one's straightforward. How much money is the company making and is it profitable? A strong revenue and profit growth trend is always a good sign. Then there is margins and operational efficiencies. For companies like Titagarh and Jupiter Wagons, which are in manufacturing, margins can make or break the story. Are they keeping costs under control? Are their operations becoming more efficient over time? Then there is project execution timelines. IRCON and RVNL, for instance, handle massive infrastructure projects. The speed and efficiency with which they complete these projects directly impacts their financials and reputation. Then there is passenger traffic trends for IRCTC. For IRCTC, the more people traveling, the more revenue they generate from ticketing, catering and tourism services. So it's worth tracking how passenger numbers are trending. Then there is government announcements and policy changes. The government plays a huge role in this sector. Keep an eye out for announcements on new railway modernization projects and connectivity plans. Policy changes like indigenization pushes or privatization efforts can create big opportunities or challenges. And lastly, this is the big one, valuations. Are the stock prices justified by the company's earning growth? A lot of rallies are driven by sentiment, but what really matters is whether the fundamentals back up the stock price momentum. So when you're analyzing railway stocks, look at these factors together. It'll give you a clearer picture of where the opportunities are and where the risks might be hiding. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.